Khiem Do, head of Asian multi-asset strategy at Baring Asset Management. Kim, good to have you back on the program.
Hello, Susan.
Yes, so you were bullish on stock markets going into this sell-off, but at all with these huge drops during the last few sessions, were you ever concerned?
Oh yeah, it was concerning over the last few days, definitely. I think that the sell-off was very abrupt. But I think that, once again, the policy makers have started to react. And as long as the policy makers start to react, I think that is a positive sign.
And has all the panic, is it behind us now?
I wouldn't think so. No. I still think that the debt issues in Europe are still there. I still think that the U.S. economic slowdown issue is still there as well.
Okay.
But at least I think that the world is not plunging into a recession or anything like that, no.
Okay, what about the FOMC statement? So they're going to keep interest rates basically at where they are.
I think that's fabulous.
You think?
I think that's fabulous. Well, it might not be fabulous for Hong Kong property prices or Singaporean property prices or something like that, because I think that what that means is that the cost of funding in Asia will remain quite low.
Okay, Kim, we had a surplus widening for China. Isn't this interesting for the month of July?
Yeah, but the interesting thing is the export growth number is still quite strong. So I think that's what I mean. I don't think that we are heading into a global recession, but we are far away from that. And also the policy makers have started to make some positive statements about providing liquidity. The ECB has done that, the Fed has done that, and PBOC, I think that through their very indirect comments, also suggest that I'm there to help you guys, to smooth out things. So anyway, I think that it all adds up to a pretty good picture. So now we have to go back to fundamentals again.
Yeah.
So forget about the sentiment. Let's go back to fundamentals. And Asian fundamentals overall are still very good.
Okay, that's right. Talk about the news from China today. They have the yuan reference rate at its strongest since depegging in 2005. You have this accelerating trade surplus widening. The picture looks, I would say, better in China at this point. Can it, though, help sustain global growth?
I think that if you have a look at the last few years, I think that China and the rest of the emerging contributed more than 50% of the growth rate in the world. So I think we'll continue to do that. If anything, maybe that ratio will increase. So maybe from 50 to about 65 to 70%. So total growth will be coming from our part of the world.
Okay,
definitely.
so if China's looking more optimistic, what does this mean for QE3 then? Do you think the Fed has to move and provide more liquidity, stimulus to the economy?
I don't know whether, the Fed will have to do a lot. But I think that the statement yesterday was a very strong statement. That, by the way, guys, we are going to give you free money for 2 years.
And more tools to come as well.
Exactly. So I think that is a very strong message. So I do think that once investors return to watching fundamentals rather than sentiment gauge, then I think that our Asian markets will rebound.
You
Definitely.
think so?
Absolutely.
A lot of this liquidity coming into the
so
system.
I'm still very bullish, as you can see, Susan.
I can feel it. And Kim, I want to highlight Korea in particular because what a shock that was to the market. Some would say banning short selling for 3 months, but only after the Korean pension funds went in to pick up stocks.
I think that what has happened over the past few months is that there have been a lot of trade about something like shorting some Korean autos and going long in Japanese autos as a result of the tsunami effect becoming more stable in Japan. So there have been a lot of those kind of cross trades between.
But also a question of credibility. I mean,
Yes. No, we as a house, I don't think that we would support anything like that. I think that we like a freer market. I agree with you.
So are you still overweight on South Korea then?
Well, the thing is the Korean market does have some fantastic companies. And so we invest more on a fundamental basis. So despite this kind of nuisance kind of measure, we still very much like a number of stocks in Korea, yes.
Let me ask you, during the dips when you saw basically 4 straight days of big selling here in the Asia Pacific, did you go in to buy any bargains?
Yes, we did actually, because we didn't actually see redemptions in our funds, which is quite interesting. So I think that the retail investors actually haven't panicked over the last few days, which is good.
Yeah.
But I guess that's because they haven't been in the market that much.
They've been on vacation, is that what you're saying?
No. They've been more in bond markets, I think. So as a result of that, we didn't see a lot of movement in terms of flows. So as a result, we were able to use our cash in order to add to some of the stocks we like in the portfolio.
Like what?
mostly the growth of the cyclical stocks, which were punished quite hard. So there are some of the industrial names,
Tech names, I see.
tech names as well. Yes, tech and the industrials. I mean, the materials names, it depends. We have to be selective about that. Yeah.
Okay, so you talked about how, it looks like maybe panic is eased off a bit, but take a look at gold prices. We have gold hitting another record, and then take a look at treasuries as well. If there is so much calm in the markets, why do we keep seeing these safety plays still going higher and higher?
I think that the issue with gold is that, I mean, in the old days, when you get 4% out of T-bills, then you would be not too keen on gold. But now you get 0% on T-bills for another 2 years, right? Yeah. And you get almost 0% in many other money markets around the world. So what is the opportunity cost about not holding gold? And gold is in shortage. You cannot, find a lot of gold each year. Yeah. And I think that Asian central banks overall are still short gold. I mean, they're underweight. They're still underweight.
Yeah, you got to be very careful.
No, not natural. But they're still underweight gold relative to the amount of zero-yielding T-bills they hold.
Okay, so you've bought some gold, right? You hold a lot of gold.
Yes, in our multi-asset funds, we hold a very big position in gold.
Is it still worth getting into? At 1759 now?
I think that it still is in the bull market. Yeah, I think that gold can go to 2,000, maybe 2,500. Who knows? Because the thing is, gold is not. I mean, you don't get a lot of new production each year, and as I mentioned, the European central banks used to have a big gold sale each year, but they stopped that, and Asian central banks want to buy that, and Asian retail investors want to buy that as well. So.
All right, Khiem, thanks for dropping by today. Sorry you can't join our all-in discussion, but it was a pleasure to have you with us. Khiem Do of Baring Asset Management.